Hey, it's Andreas, and I've been investing for over 10 years. In this video, let's take a look at the third installment of the Road to $100,000 portfolio here, a little YouTube challenge where I try to build a portfolio to 100,000 euros as quickly as possible, just to see how fast I can do it if I had to do it all over again. Now, in this series, I'm doing it with dividend stocks. I've talked a bit about why my main portfolio is in growth stocks. I think that's a superior way of investing with higher expected returns. However, with regards to dividends, we really see them shine in market environments like this. It's a special time where I'm recording this video. I'm doing it on August the 2nd. It's a Friday. Yesterday was one of the worst days of the stock market this year. Stocks went down by a lot as a result of the Fed not cutting interest rates. It's sad, it happens, and it requires a lot of discipline then to continue to invest. And this month I was a bit lighter in my wallet as well as a result of having been on vacation. You can see getting some tan going and having spent a lot of money on experiences, eating out, cigars, all those kind of things. However, I still set aside $200 in this case of the paycheck. It's all about that consistency. You will see the positions on screen over here. And as you can see, the new additions is Philip Morris, where I bought a few shares. I think it's superior to British American Tobacco. Despite having lower dividend yield, they have a very strong portfolio of brands. One of them being Swedish Match, a gem in Sweden. They have some amazing technology when they're producing their nicotine pouches. And they have the brand that's very popular in America right now with its own lingo. Everybody's sinning in the office. They're sharing the pouches, having a good time getting that nicotine to stave off boredom in the everyday office life, I guess. And they had earnings a few weeks ago, one or two or something like that. And they showed very good results and they increased guidance as well. So buying winners, just a good story. They're showing increasing market share and they've talked about increasing all the combustible products to, just be non-combustible products in the future. So basically replacing their own old brands with new brands that don't harm the lungs as much. Basically the Syn, basically the vape, basically products that are being viewed as less harmful by society as a whole. So that's the reasoning behind that. I will build up that portfolio a bit now going forward with Philip Morris. I also have a small position in ABR. I just took the dividend that I received from AGNC. They pay every month about $22. So not a whole lot, but it's every month. It's a cigar. It's nice. And I bought some shares there to get price notifications when large changes happen. Because the company that used to attack MPW with short seller reports here, Viceroy Research in this case, is targeting this company as well. They released a short seller report claiming ABR was worth zero basically. It was a donut according to them, putting downwards pressure on the stock. And I think it's not the last attack we will see, and I think that people will be afraid. I think we will see more bad news. They have earnings today as well, so it's going to be interesting to see that. It could potentially send the stock higher. Well, then I missed out, but if they continue to short attack, then I think it will drive down price and that will create a long-term buying opportunity. So I could switch to buying ABR instead of Philip Morris going forward. You also see 10,000 shares in MPW. Currently, they're paying 15 cents a share in dividends. Very nice. The payout ratio was 64% of the normalized free funds from operations here in this case from the last quarter. And on the 8th of August they're gonna have another quarterly earnings report. So I'm very excited about that one. It's like the Super Bowl for me. I'm gonna follow along. Hopefully we get some good results that put pressure on the shorts and we see a large increase in value as a result of that. But in this market condition, as I mentioned, with stocks going down a lot, I think that's a time where dividend stocks really shine. I think that if you try to have a lifestyle where you're able to live off of the assets you own and not the income that you generate with your time, then it's very healthy to have a mix, because there will come downturns in the stock market. And when those downturns come, I don't want to sell the growth stocks to pay for a roof over my head and food on my table. I want to be able to consume less, drag down consumption basically, and be able to live off of dividends instead on a larger scale. So just taking the money that comes in, whether stocks are up or down, and just wait for better market condition and then sell more in a more favorable market. So that's the rationale behind it. It's diversification. It's just lifestyle related, because of course optimal theory, growth stocks are better in that case. You have higher expected returns, but we live in a society where job security is not what it used to. Anything can happen today, and it's important to build adequate safety net for that, to be able to adapt to lifestyle changes when and if they happen. Let's take a quick look at the total value of the portfolio as well. You can see it up here once again. Nice round numbers. A little bit down since the last video I did. Of course, markets go up and down. These kind of price swings happen. And it feels very scary in the beginning when you're new to investing and maybe the stock drops 8% the day after you buy it. It's not as fun as when the stock just moons straight away, but you learn to live with it over time, and it's gonna be just less and less scary. Eventually, you're not gonna feel anything when the stock market goes up and down a lot. And it's just like with everything else. You have to discipline yourself, you have to train yourself, and eventually you will be in that situation as well. But as with all other things, it takes time. So to summarize the most important parts of this video: when you build your wealth, stay consistent, have a clear strategy that you know you can stick to, that you're not gonna sell out of in moments of fear, because you know what you invested in. You have a clear thesis, you've done your due diligence, you understand the business, you understand the challenges, you understand the nature of challenges, if they're temporarily permanent, if there's a large macroeconomic trend working for or against you in this case. And when you have those bits in place, then market downturns like this one feel a lot less scary. That's been it for this video covering the dividends portfolio. And as always, I hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.